If you're like me, you're always looking for the best ways to invest, finding smarter investments that are going to maximize the rate of return on your money. And if you're doing the research or you're talking to people, you're being told, invest in the stock market in your 401k, invest in bonds, invest in tech, invest in real estate, you have to diversify. I want to break down the two most common investment types, which are the stock market and real estate, go over the pros and cons of each, and tell you why I prefer one over the other. And I'm sure, no spoiler alert, if you know me, you know it's going to be real estate. Let's jump right into the pros of the stock market. There's definitely more than the 4 I have up here, but I think these are the top 4 that make the stock market attractive. So the first one is the low barrier to entry. If you have $5, $10, you can get started today. Number 2 is you're betting on the US economy. So as long as the US economy is getting better, the stock market is going to go up. The third is there's index funds and ETFs that make it extremely easy to invest without having to do due diligence. And number 4 is liquidity. If you need to get out, you need cash, you can sell it instantly. There's a marketplace of buyers and sellers that are transacting every single second. Now for the cons of the stock market. I'm a little bit more of an optimist, so I only put 3 on this list, not 4. The first one being volatility. Every second of every day, or Monday through Friday when the stock market's open, it's either going up or it's going down. It's constantly changing in value, and for the most part, we don't know why. Number 2 is liquidity. I had it as a pro, it's also a con. And the reason why is because people tend to trade on emotion. So when the stock market goes down, people get scared and they end up selling, and that's when they see a loss. Number 3 is there's really only tax benefits when you see a loss. And I don't want to say only, but for the most part, when you lose money in the stock market and you sell and you realize a capital loss, that's when you get tax benefits where you can write it off on your taxes against other income. Now for the real estate side of things. Specifically, I'm going to focus on income producing properties. And there's a lot more pros than I have here, but these are my top 4. The first being income and appreciation. As the building produces monthly cash flow, annual cash flow, it's also appreciating over time, increasing in value. Then there's the tax benefits, where you get depreciation, you can write off the cost of the building over 27 years, which offsets the income and lowers your tax basis. Then there's the 1031 exchange, where if you sell for a gain, you can buy a similar property and defer your capital gains tax. Then number 3 is leverage, where if you're buying $1 million property, you may only need $200,000, $300,000, getting a loan for the rest. And what's happening is the income is covering your mortgage payment, which is building your equity in the property. And number 4 is illiquidity. So contrary to the stock market, your capital is pretty tied up in the real estate, which means that if you get scared and emotional, you can't just fire sale. For the cons, the first is the high barrier to entry. As I mentioned, you may need $200,000 or $300,000 to buy a property. Now, there are ways around that where you can invest with an operator who may take on investors with $25,000 or $50,000. But that's still a lot more than the $5 you need to get started in the stock market. Number 2 is illiquidity. So like the stock market, as liquidity was a pro and a con, in real estate, illiquidity is a pro and a con, because if you need the cash today, it's very hard to get out. And number 3 is the amount of time and energy you have to spend on sourcing a deal, doing the due diligence, and managing the asset or managing the property. The way that I look at it is the pros of real estate outweigh the pros of the stock market, assuming that you have the time and the energy, and you also understand how real estate works to be able to invest in it. Real estate's a physical, tangible asset. You can drive by it, you can look at it, you can show it off to your friends and family, maybe a con for some of you, maybe a pro for some of you. But seriously, real estate is a safer, less risky investment that can also provide above average returns.